Everybody wants to make passive income. It's the dream. Get paid while you sleep or out on the beach. Well, in this video, I'm going to walk you through how to make passive income from stocks, and more specifically, how to make passive income from using options. Let's get into it. All right, so let's talk about the definition of passive income. Technically, the definition of passive income is doing something one time and getting paid over and over and over for it again. So how does that relate to the stock market? Well, let's first talk about real estate. Most people are familiar with buying a house and then renting it out. And so you bought the house one time, but that renter sends you a check every single month. They call that mailbox money, AKA passive income. Well, when you look at the stock market, you have that same capability, and most people don't know that they can do it with stocks that they already own. So take, for example, you own some stock, and I'm going to draw it out for you and show you the math and how this all works. But let's just say you own some stock like Apple, and you bought 100 shares of Apple. So you only bought the shares one time, but because you own the shares, you can do what I call the rental income strategy, which is rent your shares out by selling a covered call against the stock that you own. Now, we said a lot of words there, so you might be like, hold on, back up. What do you mean you can rent your stock out? What the heck is a covered call? So let's break it all down. You see, if you have 100 shares of the stock, then you can sell a call option against your stock. So let's just say you own Apple at $100 and you say someone else can buy it from you at $105. So they have just committed to being able to buy the stock from you at $105. And you've committed to sell it to them at $105, and they've paid you some upfront money, let's say for 30 days for doing that. Now you're covered because you actually own the stock. So if Apple is trading at $110 in 30 days, they're going to come knock on your door and say, hey, you owe me Apple at $105. You're going to say, no problem. Here's my Apple stock. I'm covered. I already own it, so I can cover this deal that I made. I can deliver on my promise and give you the Apple stock. Now, you're going to have to give the Apple stock at $105, but that's okay because you bought it at $100. And that person's happy because they get the buyer from you at $105, but the stock is now trading at $110. So they can either keep the stock or they can sell it on the open market for $110. Let's look at an example. Let me draw it out for you. Let's take a look at a real share of Apple stock, and let's take a look at what you could actually get for 30 days for owning a share of Apple stock. Okay, so right here, what we have pulled up is called an option chain. All this is the prices that someone would be willing to pay you for selling an option against your Apple stock. So let's just walk through some real scenarios. So Apple's trading at $164.58. For simple math, I'm going to round that up to $165. So you got Apple stock, which is ticker symbol AAPL, is trading at $165 a share. All right. And let's just say you were going to buy 100 shares. So you're going to buy 100 shares because in order to do this strategy, you need to own 100 shares. Okay. So you were going to buy 100 shares. So that would cost you, and I'm going to put the cost in red because that's money that's coming out of your pocket. So that's going to cost you $165 times 100 shares. It's going to cost you $16,500. So congratulations. If you have $16,500, you can buy 100 shares of Apple. Now, I'm not going to get into margin because if you have half that money, your broker will loan you the other half, but that's for another video. So you own Apple at $165 a share. You own 100 shares. It costs you $16,500. Now, let's look at the example and see how much rental income can you get. Now, we're looking at a 29-day option chain. And the reason I'm looking at 29 days is because I want to keep this similar to real estate. So if you bought a rental property, you would rent it out for about 30 days and you would collect some type of rental income. So in this example, we're going to buy Apple stock for $165. And then we're going to turn around and sell the 165 strike price option, which just simply means we're going to allow someone to buy it from us from the exact same price that we paid for it, within the next 29 days. Now for that, you can clearly see here, we can get about $6.15, but for simple math, we'll just say we can get $6 of rental income doing this strategy. So I have it all written out here. We bought Apple shares at $165 a share. We want to buy 100 shares because option contracts trade in blocks of 100. And so you have to have at least 100 shares to do this. So if you have 100 shares of Apple or some stock, you can do this strategy. So it's going to cost you $16,500 if you don't already own 100 shares of Apple. Now let's look at the option contract. If we were to sell the 165 strike price call, which again, that means someone can buy the stock from us at 165 over the next 29 days, which is okay because we own the stock at 165. So we're willing to sell it at 165. We're going to sell that one contract. And here's the kicker now. Again, we're going to get $6.15 income that comes in, passive income. Now, because we have 100 shares, we have to times this by one contract times 100 shares, which really means we'll get $615 of rental income. So I want you to think about this in terms of real estate. Where can you go and get a $16,500 house and then turn around and get $615 in rental income on that house? Now, if you got more money, you could just double it and say, if you were to buy 200 shares of Apple and you had $33,000, you can get $1,230 of rental income for the next 29 days. And the reason that you're covered, so if the stock Apple goes up to 170, that person's going to knock on your door and say, hey, you owe me the Apple stock at 165. You're going to say, no problem, I'm covered. That's why the strategy is called a covered call. I'm covered because I own the stock. So I can just take the stock I own, turn around and give it to you at 165, which is okay because I was here to make the $615 of rental income every month or for as long as I could sell that option and bring that type of money in. So that is a passive income strategy. When you own stocks, you can rent them out the same way that people rent out houses, and you can collect rental income every single month. Now, there's some other things that go along with that strategy, like which stocks to do it on. How do you know which option to sell and for how long? What happens if the stock starts to sell off and go against you? How do you unwind the trade and get out and maybe give the renter their money back? There's a whole host of other things you need to consider before you just go and apply this strategy because you just watched a YouTube video. But if you want to learn more about how those strategies work, when is the best time to do them, how to position yourself, protect yourself if things go against you, then feel free to check out our courses where we break this down inside of Power Trades University and go deeper into how to execute that strategy without getting hurt. But for now, I just want to know, did that help? Did that help open your mind to what's possible if you already own 100 shares of any company? The fact that you can now create passive income and rent your stock out. Did you know that you can do that? I want to hear from you in the comments. And I'm signing off saying, remember, you never go broke taking a profit.